still managed to go almost an hour. Actually, I just looked over at my email program and saw that I had missed about 16 other messages. So let me get to some of the questions in these. Marcy is asking, if I only have $500 and should risk 30% of my capital, does that mean I need to buy only $15? Well, you know what? I haven't done the math, so let me get my trusty calculator. 500 times 0.03. Yes, it's $15. So if you've got $500 in your account at 3% risk, that means you can risk $15. And she goes on and says, how would I make any money on that amount? Well, that depends on what you mean. If you mean you want to take $500 and turn that into $500,000, well, that's going to take some time. Okay, again, you've got to get clear on when, and you've got to get clear on how much. What every rookie trader does in the beginning is they say, you know what, to heck with risk, I just want to make money. And I want to make money as fast as possible. So they blow their account up. Okay, you've just got to be careful. Get clear on when and how much, and you'll have a much better idea on how to go forward and how to study and what types of trades you can take and what types of trades you shouldn't take. Okay, everybody, I'm sorry about this. I had to take that phone call, and hopefully I was in between questions when I did. Martha writes in and says, what effect, if any, does a huge loss in the stock market have on the Forex market? Well, actually what's going on right now in the markets as far as the equities markets, the stock market, and the Forex has to do more with the carry trades. It has to do more with what's going on with the subprime. Of course, today's news came out, and I think all of the major central banks were what they were saying is they're putting in liquidity, and basically all that means is they're putting more money into the marketplace. Because you have to remember that money is a commodity just like everything else on the planet, and there are only a certain number of dollars, a certain number of euros, a certain number of pounds that are in circulation. And if all of that money is tied up in you've got some of it's going to be tied up in real estate, some of it's going to be tied up in different businesses, goods out there in the world, cars, and whatnot. All of this money, when it's tied up in this, then the banks have got to come in and they'll sell securities, in these cases usually very short-term bonds in essence, very short-term debt, to generate the cash that they need. And I know that that's a very basic explanation of it, and in fact, I'd have to go back and review this. I might even have been off on some of it. I apologize for that. But in essence, usually there's not a big correlation. But again, it depends on what's going on with the equities markets and the currencies across the world. So she then asks, is this a variable we should somehow be factoring into our trading plans? I would say no, especially with the short-term types of trades that we're interested in. Those major macroeconomic concerns don't have that much of an effect on it. Paul asks, he says, does a broker pay interest on the cash amount sitting in your trading account? That depends on the broker, and you have to make sure that you ask them to find out. At what point does the broker close all of your position to cover his margin? And he says, does he take your stop loss into account? No. The broker will close your position out as soon as you don't have the money to cover it. So, for example, if you bought at this price, 224, and if price got down to 200, you would no longer have enough cash to hold the position. The broker is simply going to get you out at that moment.